All right, so you remember when price is in a trend, let's say downtrend, it does something like this. What we've been discussing so far, we've been trying to catch the sales from these zones. However, catching the sales from these zones could be tricky because at times we might fail a couple of times to catch that zone, and those we count as losses before we eventually get the win. And then very many people find it difficult to hold on to this win long enough for it to eclipse whatever the losses have been. There is an alternate method of trading. This might or might not include knowing what the trend is, especially where it is intraday. It needs you to come to your chart at a certain time range of the day, spot a pattern, and when it breaks out, you take it. So this is what I mean. So that strategy will help you catch this sell. Well, not help you catch the sell, to give you a sell signal. You may not catch it depending on your entry technique. Then to give you a buy signal here. Then to give you a sell signal on the move down and a buy signal on the move up, right? It will need you to, at one point in time, plan out a particular range, and when price breaks above it, you assume that price is going to continue to buy, and then you enter for your buy. And then when price gets into this region, you also will need to define how you're going to identify that region. When price breaks it to the downside, you enter. So in other words, you are not bothered about the trend this time. You are bothered about picking small pips as price wiggle its way to whichever direction it deems fit, right? So people who trade breakout strategies traditionally use all of the entry techniques. In other words, to trade entry techniques, they use instant execution, which I believe you should know already, that is just buy and sell instantly. Some of them use limits, right? And many of them use stops. So let's say you have a box here, right? You could count 10 pips away and then put your buy stop, and 10 pips beneath and put your sell stops. Just like I showed you guys for Bitcoin now, it's been dancing. If I do something like this, if it eventually breaks, there's a tendency that it could break, pick me, and I make profit. However, just like with everything in life, each strategy has its own downturn. And the downside for this is that price typically does three things, one of which is breakout, reverse. Price can do that. Price can do breakout, retest, continuation. Price can do breakout, reverse, and price can do breakout, return, and consolidation. Price can do any three of these, right? This system only works when price does the second part, which is this. When price does breakout, perhaps a retest and continuation. If price does the other two, you'll be in a red. The question then becomes, how often does price do breakout, retest, and then continuation? How often? That data will be supplied by your backtest per pair, not a global, it's not a global, data. Right, so to enable us define our zones, these boxes I was drawing here, to enable us define them, we will use certain time range. If I come to my system here and I go to Forex Time Market Converter, you discover that Frankfurt is usually the first to start. Well, not necessarily the first to start, but around our time, yeah, it is the first to start. Usually, like for example, now it starts around 8 a.m. Traditionally, it's 7. Daylight saving comes into play and then something happens. But it starts around 8 a.m. What if I decide that I want to consider Frankfurt, and then anything that happens after Frankfurt, I will now decide if I want to sell or buy. Or I could even go ahead and say, I want to consider the first hour of Frankfurt and then the first hour of London. And I see them as my zone, and anything that happens thereafter, I'm going to take my trade. Let me explain what I mean by coming to the chart here. So I'm going to open a new template here. I'll go to 1 hour, so it helps us see what we want to see. For the purpose of this discussion, permit me to put a horizontal line there. Tao, please let me confirm that you can clearly see the time underneath here. What time is that?
Yeah, that's 15.
Yeah, 1500. That's 3 o'clock. So let's say I am coming and I'm checking the end of Asia. This is 8 o'clock, right? 8, and I'm using 8 and 9 just for this illustration. Or perhaps let me even use 8 and 7. You see, this is 7 o'clock and this is 8 o'clock. 7 o'clock, 8 o'clock. So by extension, I'm saying the end of what is here. I remember when I was giving you guys the illustration, I said you could use any time frame. You could use any time range. You could use first hour of Frankfurt and the hour before it, or first hour of Frankfurt and first hour of London, right? Whichever one. You could even use 1 hour, just first hour of Frankfurt, which is 8, right? 8 will traditionally be another time on your MT4. But for now, let's just use this. So let's say I'm using this one here, this 7 o'clock. Let's say that's what I want to use. For the purpose of this discussion, I want to use 7 o'clock as my points. So 7 o'clock will be the hour, the second candle, or the second to last candle before the candle ending Asia, just so that we can easily see it going forward. So I'm going to box this candle here. So it's slightly different from what we discussed. We know we discussed inside bar. I'll take that one later. So I'm boxing. This red candle is what I'm boxing, right? If price closes below it, I'm taking a sell. I don't care the trend. So once price closes below it, I'm taking a trade. I'm taking a sell, right? And this is a sell. Let's go to the next one. Again, the candle here is the candle, this small one that looks like a doji. See that? This small one here, that is our time. Again, this was 7 o'clock. So I bring this to 7 o'clock. You see that? Once price closed below it, I'm taking a sell. That's the sell. We are going to see days to fail. It doesn't work always like that. In fact, I think we've seen one already. So again, we'll go to 7 o'clock here. Right? So price closed above it here. You take a buy, you lose. Simple. And when you take a loss, you absorb your loss. If price comes back and close beneath it, you take a sell. If price comes back and close beneath it, you take a sell. So that's that candle there. Right? This was a close below, and that is a sell. Depending on whether you want to take it at that time of day. Again, look at this. This is the candle under consideration. That's a close above it. You take a buy. You may or may not hit any TP depending on your. Then it came down, and let's even say hit your stop loss, clean and fine. What about this day? This is the candle in question here. Right? You take a buy, it goes up, maybe give you TP1, pulls back, and definitely would have hit your stop loss or break even, or whatever the case may be, and then continue going your direction. Again, I'm framing the strategy. I want you to grasp it. That's not all about it yet. So this day, this is the candle of reference. Right? I'm coming to see if I get a break above. This is the break above, and this is my buy. right? So this is a scalping strategy. You just want to go in and get something. Of course, we've not discussed entry yet. Will I enter at the top of the candle that caused the breakout, or will I wait for it to come back into that candle? We've not discussed that yet, right? We're still framing it up. Look at this again. And this is the candle of reference. This was a break above. And this is a buy. For those of you who are used to HPLR, you will see that this is completely different from HPLR. Because in HPLR, what we do is that we trade counter what is happening. So we're waiting for price to come take this, to go up first, then we sell, right? So what happens is that we usually would lose on a day like this, and then we'll get confused here. Then we'll be happy on a day like this, right? So we lose this, day one we lose, at point 2 we are confused, point 3 we are happy. Same thing with, I don't care whatever strategy. See, I don't care whatever anybody is posting. I don't care whether they tell you, boom, scatter, everything. You will have losses. It's very easy for me to come to the chart and show you all my wins. There will be losses, right? How would you handle the losses? Or what damage can the loss do to your account is what matters. So on a day like this, you entered, it broke out above here. It broke out here. And then you would have attempted to go long. Maybe it would have worked, maybe not. And then it started coming down. And then it closed beneath that candle here. And then you had a reason to go down. That is what a breakout is all about. Breakout means you have to get a range, right? Some people look for a range as consolidation. They find a place of consolidation and box it out. But for this intraday strategy, you just want to get what is the direction. Now, the challenge here is that even though you say you don't want to follow a trend, okay, let's look at this day. This day you had a close beneath. This is the candle of reference. You had a close beneath here, and then it sold. We've not answered the question, how will I enter? Because will you enter at this point, or will you be waiting for it to come back to meet you at your zone? We've not answered that question yet. Right. So if you like this method, right, you could do this. By tomorrow, I will, or maybe next week Tuesday, we'll discuss optimization. I know we said we'll discuss it this week, but time has gone. I wanted to show you guys how you optimize. So let's say you have an EA that trades this method. The question you want to do is how you optimize it. And you might discover that your optimization figures for AUD USD is completely different from your optimization figure for EJ. So when you set them up, you use the optimized figures per pair, right? Now, so this is one method. However, we can make it a little bit complex by adding something to help us filter trend, not long-term trend, but short-term trends. And perhaps it might change our results. Again, I'm using the word perhaps. So let's come back to where we started. We started somewhere around here. So if I get my value line, just a moment. If I get my value line, just a moment. Get my value line. Okay, my value line is up here. I think I just need to make it thicker. So I have my value line here. Let's see if it's going to give me something different. If it's going to make this thing easy for me to trade. Where did I start from? I can't remember. I can't find where we where we started out with our no. Okay, let's move on. I wanted to compare results, a quick comparison of what we did before, and it must be somewhere around.
3rd of September.
Somewhere around here, right?
3rd of September.
3rd of September. Okay. 3rd of September, you said?
Yes, sir.
Okay, let's see if I. How come all of a sudden I can't get to 3rd of September? No problem. Let's use wherever we are and just deal with it. So let's look at this now. So what I've just done is that I've just looked for short-term trend, right? So when I look for short-term trend, it's going to cause a complication for me. The complication is now I will not be able to take every breakout. So let's see, as at the time we got here, as at the time we woke up, remember, we've not concluded the strategy, we're just setting a framework. Right? I'm going to suggest the time ranges where you should look for your breakout. Then I'll also tell you how you should determine your own time range. Let's say you have kids and you have to take them to school, and then or you have to commute to your place of work, and then your system or your phone or whatever is not going to be easily accessible. Other persons might have 7 a.m. as their candle of reference. You might not be able to take 7 a.m. as candle of reference. So why am I teaching you guys optimization? You will look for the candle of reference of your choice that gives you, the time range for the candle of reference of your choice. Then you will go and use the system to optimize it. I'm tempted to just discuss optimization briefly so that you guys will see. Let's look for something to optimize so you guys will see. Let's pick I'm not sure. Okay, let's pick this HPLR. Let's pick HPLR where we are. And I want to optimize. I'm going to use a particular time range. I'll use beginning of October to the end of October, for instance. And I'm going to use AUD/USD 30 minutes. I'll go to the properties like Prof explained yesterday. I'm going to say use Asia and don't use bias. Use Asia, don't use bias, only, for instance. And I'm going to OK here, and then I will run this. Let's see what happens. And practically every trader I know, including Michael of ICT, everybody, they keep modifying. And I keep asking myself, if you have the Holy Grail, why do you need to keep tinkering with it? Even one of the traders I follow, FX Hunter, I noticed he's modified some things a little. Why? Why do traders do that? The market changes. What works for you 6 months ago might not work exactly the same way, right? Especially if you have several factors. The more the factors you consider, the more the result will deviate for any change in any of the factors, right? So let's see how this ends quickly. So this one now, we are using Asia high or low. No bias at all. We don't care what the bias is. This is the report. It was in a loss of 546. This is the graph kept coming down, right? So we could come here and say, we could come here and say we want to optimize it. We want to optimize this particular one. And to ask us, what do we want to optimize? Right? I can come here and say, okay, I want to optimize my money risk. I want to optimize my break even. I want to optimize maximum trials per day. Let's stop here. Unless I want to optimize for you guys, based on the strategy we discussed, it will be you optimize hour of the day vis-a-vis risk reward ratio. So let's say I want to optimize trials per day. I'm going to start with 1, and I'll end at okay, let's end at 4. Money risks, I'm going to start with 0.5, add 0.5 until we get to 2. Let's say that's what I want to optimize. Then my break even RRR, I'm going to start from, okay, it's 3 there. I'm going to start from 1, and I'll end at, let's say, 3. And I'll click OK. And I click Start. So what this does is, rather than me doing it myself, it's going to plot everything for me. So we'll leave it to keep working while we'll continue our discussion. We'll come back when it's done. It might take like 5 minutes. It might take like 5 minutes. So let's let it. Yeah, it's going to run 48 iterations. It's going to run 48 iterations and to tell us what the result looks like at the end. And then we'll determine what we want to do. So let's Control R, and then we'll come back here. So let's assume we continue with that our initial method, which is this. This would have been a breakout to the upside for which we would have taken a buy, and then we would have lost. Right? Then it became bearish. Let's look at this day. So let's say this was our zone. If for any reason this thing broke out to the upside, we will not take a buy now. That's what this one means. We will not take a buy. We will only look at taking a sell. So if it broke to the upside, we will not take a buy. We'll only take a sell. And in that case, wait for it to break to the downside, in which case we would have been thinking of a sell from here. On this day, it still looks bearish. So we'll only have been looking at selling. So when this broke to the, it never broke to the upside, it broke to the downside, would have initiated a sell and would have lost, right? Then here, we are looking for a sell. Again, would have entered a sell here. And then again, would have lost. But what about this day? This is a candle of reference. We'll only be looking for buys. So if it has broken to the upside here, then we would have taken a buy, right? And here it broke to the upside, and then would have taken a buy. So that's the concept of adding a value line to just your simple scalp strategy. Let's take it a little bit deeper. So I've explained the first one. We are just doing it blindly. The second one, you are trying to sift to see if you can improve your result. If we take it a little bit deeper, what you'd notice is that we can give ourselves smaller stop losses when things like this happen. We can use this 1 hour trend and then go to a lower time frame, like 5 minutes or 15 minutes, to enter our trade upon the breakout. So what that does is that it reduces our stop loss and then gives us something to eventually trade with, right? I'll discuss that in full tomorrow. Let's look at this if it's done. It's still running. I hope it will give us some results. I hope the parameters we picked were okay. All right, so what I'm interested in is taking a trade and getting money that same day. And if I lose, I lose. So I've told us one way we can dig it deeper. Now let's look at the last one I will look at today. So let's say we are going up. The trend is up. But then the short-term trend, 1 hour trend is up. And then you got a break to the downside. So you are refusing to take the buy. This is your range. So you've gotten a break to the downside and you're refusing to take a sell. I beg your pardon. You're refusing to take a sell. So what can we wait for to confirm perhaps if we should buy? First thing I explained is that you have to come back above this zone. What if I don't want to come back above that zone? What if I get an engulfer above this bearish candle here? Can't I enter my buy straight up from here? And then by the time I'm even getting to this breakout, I would have made some pips. Can't I? Let's look at it, how it works. So let's say I am in a buy, like 8th of October here. It's a buy trend. This is a close below. Right? This is the box. This is the range I'm looking at. But this is the close below that perhaps might have told me to sell before. Or no, I think we're looking at a different candle. Let's clear this up again. This is a different candle. Yeah, this is the candle we've been using, right? I'm not saying that's what we use, but this is the candle we've been using. So this would have been our zone. And then we are looking at what to do. If we had used the initial method, we would have entered a sell right here. But now, if you remember what I explained here, we can now say, okay, I'm not going to take that sell, not because it won't work, but I don't want to come to the market just trading any direction. So I'm going to wait for a first sign of bullishness. So this is the last bearish candle, and this is the close above it. So I'm going to take my buy from there. I'm going to take my buy from there. Something like that. Right? But on a day where I'm already in a buy, and I just simply get a bullish breakout like this, or like that, whichever one, then I'll just take my buy. But if it comes against me, first, this is a bullish breakout, so that would have been a buy. But if it was a bearish breakout first, then I'm going to wait for price to give me a signal of a buy, which will coincide most times with HPLR, right? Like it did somewhere around here, and then we'll buy. So now I'm willing to trade any direction. I'm willing to trade continuation trades, which is what HPLR wasn't giving us. For instance, for HPLR, if you're in a downtrend, you only sell after price pushes up to take out yesterday high, Asia high, weekly high, then you sell. You see, but in this zone here, there's every tendency that because price is selling aggressively, it may not give you an opportunity to come back up for sell, to just continue selling. So what do you do on those days? Those days you catch continuation trades. So for instance, this would have been a continuation trade. This would have been a continuation trade, right? Price broke above that candle. This would have been a continuation trade for which you might not have had price coming to your Asia, right? This would have been a buy trade that would have hit stop loss, right? And then the trend changed bearish temporarily. And when it changed bearish temporarily, if you do what I just said not long ago, going to lower time frames, then you might find an entry somewhere around here to take this one to the downside. And because it's 5 minutes, 15 minutes, you will catch some wins. Some before price start moving up. Of course, it won't happen like that every day. So here we have buy days, where if we're trading strictly HPLR, we will not have gotten a setup because HPLR will be waiting for price to come back down. But here we have, this is the candle of reference, and price broke it to the upside. That gives us a buy. We've not discussed entry technique. Remember, I keep saying that. But again, this would have been a buy, no matter how small it is, that would have been a buy. On a day like this, this is still a buy. But this is the candle of reference. Rather than buying, it broke below. So we said we will not take that. We'll wait for it to close above the lowest bearish candle, which is here. So this is going to be our buy now. So the advantage of this is rather than waiting for it to close above this zone, now my entry is lower here. And most times it will even be lower here in a case where it broke to the downside. Let me quickly check that result and we'll stop this. So it has finished. Let's check. It didn't really do anything. The conditions didn't meet what we wanted to meet. So I'm going to pick up another one. Old experts. Let's see properties here. So this is one EA we did that has that range. It has that range. So you can choose your own range and determine what you want to do. I'll leave this for when we come back to optimization so that I can pick one simple one to optimize for us. Let me see if Prof is online. Or Taiwo, can you remember the last one I tried optimizing in the morning meetings?
Okay.